This is Eric with Mother.com, July 8th, 2021, and this is pre-market. As far as stocks are concerned, we can see the US markets are called to open lower by about a percentage point at the open in the next 35 minutes or so. And we can see that the cryptos are also down for the day. And as a side note, one of the things I've been talking about for many months is this idea that the cryptos are different. In my opinion, they are not. They are essentially reflecting what has been a very strong bull market. And as they pull back, as the general market pulls back, they are also going to reflect the general market sentiment. In other words, wherever the stocks are going to go, generally speaking, the cryptos are going to follow suit. Now to the video. So yesterday, I saved this chart. I was going to record a video, but I never got a time to do so. This is the weekly chart for the semiconductor index as of yesterday being Wednesday, midweek. I'd noticed that it was pulling back and was seemingly breaking below the prior breakout level of about 3,300. So this is the weekly closing high right there. We had spent last week above it. In other words, last week was a breakout week. But as of mid this week, which is yesterday, when I saved it, we were back below the breakout level. In other words, as we know, this was starting to look like a red flag. We know that failed breakouts are notorious for taking instruments lower. As a visual example, there's a good example right here. In early 2020, you can see we had a 1 week breakout right here that ultimately failed. And this failure, even though it seemed benign, this breakout failure ultimately led to this market drop in February, March of 2020. And by the way, since then, since the lows of March 2020, we've seen a very strong market, absolutely strong market. And even as of last week, was recording all-time highs in the S&P 500 and the NASDAQ. Now, because we've had a big run in the market, especially if you consider where the market has come since the lows of 2009, we know that this market has been due for a major pullback, if not some type of a strong, aggressive bear market. Now, that was the price. If you take a look at the RSI also, we see some red flags as of yesterday. Number one is the simple RSI topside line. You can see how as of mid this week, which was yesterday, Wednesday, we tagged that line and we were respecting it, moving back. Keep in mind where this is taking place, just around the 61.8 RSI level. Okay, that's one line. The other line is this line here. Let me just extend it. I'll do it like that. And what this line gives us essentially is a break here for a shallow pullback. And now we've come all the way back and failing to move above the blue line. That's another way of looking at it. Another way is to consider where we broke down in 2020, which is this break point. The break right there. Now take that line and use it. And we can see when the market was moving higher, it was above the line in this phase. Strong move was above the line. Here we go above the line, back below it with uniform action. Maybe you can see that. Above the line, back below it with uniform action. Gives us this reversal area here. And now we've tagged it twice since June. So if I bring back all the lines that I've drawn so far on the RSI, on the weekly, this is a 2-year weekly chart. You got the top side line. We have the back test line. And all of these lines essentially converge right where we are seeing resistance. So the pullback was already showing signs as of mid yesterday. Now, if there's going to be a major bear market, then it's going to take the break of this RSI lows line. The RSI lows line on the weekly that connects the lows of March 2020 and the lows over the last 3 months. This is going to need a break if truly we are priming the stage for a major plunge in the general market. Remember, last year, when we had that big drop early 2020, it took a break, this break right here, before the market really saw this plunge. Which again brings me to my final point, is where we've come off the lows of 09. This is 09 right there. And believe it or not, that's a price level of 200 for the semiconductor index, now trading in the 3000s. So there's a reason and a need to correct. Now, a quick look at the Fibonacci retracement tool. We can see here if it drops 38.2%, we're talking about coming back to the 2200 price level. If it drops 50%, 1800. If it drops 61%, it's going to come and test this 1400 price level. E as C S. And so it is. Eric Muad with Mother.com. Love, light, love. Namaste.